take over. Steve, Andy, how is your Tuesday?
Kind of cold, actually, Scott. Hey, Andy, what's going on?
Cold. Hey, Steve. Hi, Scott. Hi, everybody.
What's the temperature over there in Texas?
It's nice. It's nice. It's probably upper 60s.
All right, well, it's 60 here, so you're beating us in
man,
San Diego.
Yeah.
That's what I'm talking about.
Okay.
All right. Hello, everybody. Welcome to the webinar. We'll get started here as people file in. As usual, we have a couple of disclaimers. Just a reminder that Andy and myself are longtime traders of our own account and also employees of Trade Ideas. So we've got a few opinions, but they're our own opinions. They should never be construed as financial advice. So don't take it as such. Again, we've been using the product since the inception, and we recognize the rich depthness of the product. And not everybody can get comfortable with it, in a 24, 72-hour period. So we invite you to, take a week or two to really explore it and learn how to use it. We're here to help you as best we can and how you want to tailor it to the way you want to use it. And some of the ways we can do that is primarily Barry's live room every day. I don't think any question really goes unanswered in Barry's room. So you've got a visual and a free forum to come in and ask questions if you're a current user or thinking about using it. Barry's the place to be. And then every day, we give them a break at noon Eastern, and either myself, Jamie, Michael, Andy, Sean, and one of the Chris's might fill in and give us a different flavor. But the point being is it's a support session at noon. It's designed for new users or older users who just want to, I don't mean older, I mean experienced users who want to have a visual demonstration of an answer when they have a question. And we do that every day. And the way to get there is that bottom link. Again, if you've been there a couple times, YouTube will recognize you and it'll be on your dashboard. If you just pull up the YouTube dashboard at noon Eastern, you'll see the option. Otherwise, if it's your first or second time in, just grab that link down below, trade-ideas.com/live. It's a great redirect to send you right into the live room. And again, no question goes unanswered in there. We're growing tremendously. We're hiring new people. It's impossible for us to take the time to return somebody's phone call request to talk about a scan. It's not an efficient way to do it for you or for us. And so these are the types of forums that you want to come in and get your information from. Don't be shy, because people would literally, they just sit there and they learn from other people's questions. And that's the whole design. All right, so all those announcements aside, we'll get into this week. Again, the reminder, the lead off. Human and machine combined. Neither of us can do it on our own, but we need each other to do it. If you're over 45, maybe you remember that old commercial with the peanut butter and the chocolate people walking down the street and jamming it into each other's food, and before you know it, they discovered Reese's peanut butter cups. It was like a genius commercial. But that's literally, it's the man and machine. We need the machines to help curate the ideas, but we as a human are better at risk management. Risk management, that's going to be probably a good term to kind of keep in mind today. So we'll do kind of the normal flow. I really want to spend a lot of time on the market recap this week, because I think that's really where the content is going to be for today. If there's any value that can be created, I think we can kind of show you a few things here where we are at the point of the market right now. Andy has got some thoughts on the AI, and where I'm going to then revisit the last 4 trade of the weeks to kind of continue to make the point I'm going to make here in the market recap, including Macy's, which thankfully officially did not trigger, but what an interesting case study that's going to turn out to be. And then as we kind of just start to summarize things and maybe try and apply it towards trade ideas, I'll go through a little quick step of how to build a fading type scan, just how to use the program in a different fashion than maybe some of the people have been using it, buying the dips lately. And then quick sector glance to kind of see where we are going into tomorrow. And then, while I'm going through the sector glance, we can attempt to do as we always do, maybe look at a dozen charts or so on the way out. And that's what we'll do. That's my agenda, and I'm sticking to it. So to start off with, what's going on with GameStop after hours? Nothing. Not that I even really care about the meme stocks. I don't concern myself with that. It's more of a fun thing to watch than it is to participate in for me. Although Michael and Dan have done a pretty good job. All right, so let's start where we were last week. I think we were kind of like this last week. Let me see here. 1, 2, 3, 4, 5. All right, so we were looking like this last week. And I said, you know, I've been having to regroup and wait for things to set back up. And so I said, I'm going to be watching the market, and maybe what we'll see is something like this where things start to set back up, and then I can start looking for longs again. But in the back of my mind, I have really not been that bullish. I've been stubbornly bullish, you know, trying to look for consolidation breaks and buy those consolidation breaks. But there's just so many things that's bothering me about the bigger picture here. I don't know where to start. So actually I'm going to start with some conversations I'm having. I know Andy's going to probably echo a lot of the things I'm saying, but some of the other people I'm speaking to that I've known for many years that are good swing traders, you know, Brian Shannon sent me a private message and we talked, and he said, you know, I said, nothing's working. Things are coming apart under the surface from my perspective. And he says, yeah, I'm seeing the same thing, and I've been doing very little lately. I said, yep, same here. And I've kind of had that tone with you guys for the last few weeks. Haven't really been super bullish. I don't really feel like it's time to be fully margined in a margin account, you know, for a few different reasons. Yeah, we're trending higher, but God, it just seems like every day for the last 3 weeks or so, maybe longer, you come in and you see the S&Ps are up 1%. My stocks are down 2.5%, 3%. You know, it's like, geez, the individual names in my portfolio are not really reflecting what the headline of the evening news is saying. Dow Jones is up 2%, and you know, that's not really what's going on under the seams. And I think I did this last week, but here's another little, you know, nail in my willingness to want to be long here. No, I was going to add an RSI. I think we looked at this last week as well. Talk about divergence. Let's grab the pen. Okay, if you don't know what divergence is, it's when markets are making higher highs. That's kind of a higher high, but it still is a higher high. But the amplitude at which it's doing it is kind of doing it at a declining pace, a lower high. This is typically, technicians call this bearish divergence, negative divergence. I call it like the plane starting to lose the lift of the light air up here. I don't like that as a backdrop to be trying to risk a lot of capital in this type of environment. So let me remove that. You know, same thing is probably going on in the NASDAQ. Let's just take a look before I remove that. Eesh, even more so, matter of fact, except for that lower high. So I'm seeing friends of mine not interested in putting risk on the table right now, and I'm in full agreement with them. Let's come back to the NASDAQ here if we take a look. This thing was our leadership. It went higher and then broke as the S&P and the Dow took leadership as a pretty good, actually 10% correction really, that we had last month. But what I'm seeing over here is, and something I learned from Brian Shannon. Oh, and by the way, speaking of Brian Shannon, I just want to illustrate, you know, publicly, he said, great comment from him. And if you're not following him, Alpha Trends is where you want to be. It only ends badly, because people say, oh, this is going to end badly. It only ends badly if you do not have a plan which is centered around risk management. Well, my plan right now is risk management. I don't have a lot of risk on the table because I just don't see what I want to be seeing. And I'm going to continue to drive some more points home with, you know, the trade of the weeks over the last few weeks. They're just not following through, even if they give us a little bit of movement. But one of the things Brian taught me was he uses the 50-day moving average in blue as basically a general health. Is the stock generally healthy, or in this case, is the index generally healthy? Yeah, it was generally healthy above the 50 here, and all of a sudden, it can't get back above. It can't get back into a position of general health. It tried 2 days over here, but pretty much got rejected. The tippy top of the wick today was pretty much the underside of this moving average. So every day that continues to prevent a close from getting back above, and that's what I'm looking for, a closing candle to get back above that 50-day moving average, which is now flattening, which is also starting to add to the pressure. I mean, this is almost like an old cartoon character, you know, hanging on with the one finger trying to stay on the window ledge here. It's just not, whatever it is, it's just not letting it get back on that ledge. That's a bit concerning. Let's look at the S&P today and delve in here a little bit. I showed you guys a lot of times, even last week, the 5-day moving average on a 15-minute chart. And again, the indicator is essentially just using a 130-minute period, 130 period moving average on a 15-minute chart will give you that blue line. And I start to notice things when they give me great correlation that you just can't deny. And in this case, giving us quite a pivot line here. I mean, it was acting as support in the S&P last week on that line. And then once it broke, everything changed. Now all of a sudden that line is the line of resistance. Yesterday, the high of yesterday, after moving all the way off that low from Friday into yesterday's close, found sellers at that 130 or 5-day moving average, we'll call it, which is half of a 10-day moving average. And then move into today, and attempt number 1 decline, attempt number 2 decline, and then the buyers gave up. So seeing that over there in the S&P is not really making me want to start to look for longs again, because all of a sudden we're underneath the 10-period moving average there on the daily chart. And yes, my my cursor just froze. Yeah, I'm going to do that. I'll do that actually right here, Dave. Dave brought up a good point last week, and you know, since I'm using that 130 period as my 5-day moving average, take note of this 10-period moving average right here. Well, all we have to do is we can do the same thing with that, and we will convert my 130 into a 260, which gives us the 10-day moving average as seen through the eyes of a 15-minute chart. Okay, it changed it a little bit, but you know what? What did it give us? Yeah, it's a little sloppy there, but look at that, the perfect line right there. Dave, I'm going to suggest that what I notice is I can look at this, and this is what I'm seeing. All I need to see here, I'm seeing rejection, rejection, 2 rejection wicks under the one. It's the same thing that we were looking at in the NASDAQ on the 50. That gives me all the information I want to know. And when I did that today, I kind of looked at it, I said, yeah, we can do that, but I'm getting the information that I need from the daily. And then when I put it back on the 130 period, giving me a 5-day, it just seems to be giving me more value. It seemed to be a lot more, have a lot more correlation there. So I'm going to stick with that, but I do appreciate you showing me, oh, I lost it, showing me that. Where did we go? I lost my 10. All right, so we're going to add a 10 SMA and make that a 130. There we go. It's back. That's a lot more definitive on the intraday. So I'm going to use the faster periods on the intraday. What else did I want to share? Yeah, here's one more thing. You know, before we get to the trade of the weeks, you know, here is my sector list. Let's quickly look at today. Also, the IWM gave up 3.5 points today, quietly, 3.5 percentage points in the Russell 2000. Really nasty day. Yeah, did you catch that, Andy?
I did not.
Yeah. I bet you we see some divergence over there too. Let's just, because again, guys, the general market is kind of the theme I want to talk about today. So I don't mind spending more time here. Oh yeah, look at that. And there's some ugly divergence in small cap land.
Mm-hmm.
Losing the amplitude.
It's about as ugly as it gets.
Yeah, I mean, that's quite an illusion, a higher price, but doing it with, and this is why I call it coming apart under the seams. That's what I told Brian, and that's what he seems. So there's that. Lastly, before I let Andy weigh in, because I'm sure I'm probably forgetting something, let me turn off my RSI. I want to show you one more thing that's just cracking me up. Not cracking me up, but just making me scratch my head and sit on my hands and not play to the long side right now. What do we got? SPYs. Let's look at my single stock window. SPYs were down 0.75. Wow, that's hardly a day. Headlines when they read the news tonight at people's dinner table, they're not going to care much about that. What about today's NASDAQ? Because they always report that too. Today's NASDAQ was down, oh, even less, barely even down 0.5%. Okay, well, that's just well and great. Can you guys tell me where in my sector heat map here, where you were safe today?
Exactly. Tell
me where the hell this market is being held up. All right, so if you feel like I'm raising caution flags out there, yeah, this week I was trying to remain neutral and you give both cases the last few weeks, starting to see way too much. The only place you could hide this week was in the treasuries. So we'll come back to that towards the end, but I'm thinking Andy might have a few things he might want to say about this market and how maybe he's feeling right now with risk.
No, yeah, you're exactly right, Steve. And I felt this like you. Yeah, I loaded back up in Tesla. I was shorted from 700. I covered half of my position 3 days ago, but then I loaded back up today because uh, getting to Steve's point, how difficult it is to play to the long side. My longs are getting stopped out, and my shorts are not even getting close to get stopped out lately. So that's always a kind of a hint to me. Um, and Steve's right. I mean, I'm seeing so many traders, struggling, and this is a time to pull back. But at the same time, you can't really load up on the. I tell you Steve, what's frustrating for me to the short side is, I mean, the market will look like crap and close like it did today, and then all of a sudden you wake up in the morning and it'll be a 1% gap up, and that's hard. Yeah, that's hard to stomach, just like Tesla did. Look, 2 days ago and yesterday. I mean, it's like, come on. But that's why I guess they say bear markets wipe out both bulls and bears.
I also, in the back of my mind, wanted to use that once again. Looks like that 5-day moving average got a hold of Andy's Tesla short. I think that's one he added to it again somewhere in here today. And so now Tesla price is guilty until proven innocent, and Andy's got the upper hand there for the moment.
Yep. I've made probably more money to the short side, so in the last 3 weeks anyway, than I have to the long side. But anyway, and Steve, I'm going to take it over here in a minute, and I will show you the same thing. It's kind of I'm seeing in the AI. The AI has been, Steve pointed out to me as well, has been kind of flatlining for a while too. Getting in a funk like a lot of traders. So if you don't mind, Steve, I'll just take it over.
Yeah, let's go for it
right now. Hold on just a minute here. Okay, where is the? Oh wait, it's pulling up my audio here. Send it over there. Send it to me, Steve, if you don't mind.
Right.
Let me see.
Yeah. I'll change it
I'm on my mom's computer, and it's a little wonky for me. Thank you.
There you go.
All right. All right. Yeah. So, like I just mentioned, I noticed the AI has been, kind of in a little funk today too, just like a lot of models, I'm sure, are. But once again, this is what the AI had to work with today, right? Holly exits every trade at the end of the day. So technically, she's a day trader, and you had pretty much a small gap down in the market, a lot of slot back and forth, and then basically give it up at the end of the day. But I was noticing a lot of the longs. None of them performed today, and as I go through them, you're going to see they're quite interesting setups. To the long side, you're going to find a lot of these above their 50-day moving average. This EHTH looked like it may want to go ahead and fill the gap, at least come up here to the 200. Failed. Schwab, not a bad looking chart there at all. Well, that's not my favorite. I see what it was doing. It was playing the support here and on the daily there, but also another fail. CWK looked like it was going to pop this morning and fail. You're seeing a lot of this in my, very similar to me and the traders that I trade around with. I see a lot of us getting stopped out and what would be very good setups. Here's a big gap up tomorrow. A lot of times these work and just keep going higher, just basically just traded sideways. Cisco, the daily is hanging on very well. You can see a big move yesterday and kind of sideways today, although the market did finally catch it at the end there and close near lows. But once again, a very strong stock that had no momentum and failed at the end of the day. This one may want to keep an eye on, because I noticed, look over here, guys, it's a dividend. Okay, Cisco pays a dividend, so this might be a flight to safety, looking for value plays, something that you can park your money in and earn a little dividend on and possibly get price appreciation as well. It seems like a lot of money is rotating into these value plays lately. So I'm sorry to get back on the market, but I just kind of wanted to show you an example of the AI, which has outperformed the market now for several years handily, is also in kind of a little funk. Okay, so a lot of possibly changing winds in the marketplace just by seeing very good traders pulling back, things aren't working, failing. The AI also kind of backing up this this theory as well. So, but gosh, for me to, you know, call the top in this market that's been just going bananas for 12, 13 years, I can't do that for sure. But I'm definitely leaning more bearish. And like I said, my shorts are working. I'm hedged at all times pretty much, and my longs are not working, and my shorts are. So you take it and do what you want to with it. But that's probably about it, Steve. I'm not going to dissect. There was a good short here. It's IONS today from the Holly, but it was just kind of an open that wanted just bled all day. But that's about it. There's, you know, good time, guys. If you let's face it, probably 95% of you have not really experienced a long extended bear market where you get into a bear market for several months. Yeah, we've seen them for, you know, it seems like several weeks, but Steve and I have both traded in some really ugly tapes, some even lasting for measured in years and not months. So
let's put it this way. I have access to 3 accounts, and they're all pretty much sitting there not doing anything.
Right. It's hard sometimes just to be in cash, but it's better than losing money. So
it's, yeah.
Yep.
All right, I'll take it back.
All right, take it back. Yeah.
I'm going to attempt to try and answer the question from Thomas regarding, you know, trying to save is B plus. I just want to make sure that you are not using the B plus file save menu, that you're going to the actual complete toolbar and saving the entire layout as default. If that's the case and it's not saving your brokerage plus settings, then I'm not sure. Andy might have a solution. Otherwise, the support ticket option, what I gave you there. All right, great. So let's just bring up the trade of the week. And the golf gods were so happy and smiling on us this week because, you know, it would have been just like this market we were talking about to pop up and explode through that blue line, which was our trigger line yesterday morning, which never got triggered, thankfully. So technically we're kind of, you know, in learning mode on a non-trade, and I'm pretty sure it's not going to trigger, and if it did, I don't think I'd want it. But that's what the intraday chart looks like. It's done nothing but sell off. You can see a little B tag here. I tried to simulate a possible buy just in case we were going to talk about you know, a failure at the 10 period with only the buyers to step in at what I call the backstop many times. That didn't even work. This thing was just walk to the woodshed. It was just pile driven, and it's probably got a date with the 50-day moving average down here tomorrow. This is the kind of stuff we were talking about. That's the setup going into this weekend. This setup was money back in October, November, when things were moving higher on good volume. They would consolidate, pull back, bounce on their 10-day moving average, find buyers, and take the next leg higher. Perfect example of what we're talking about. This trade isn't working anymore, unfortunately. And I think we just found that out with an emphatic exclamation point the last 2 days here. There you go. That's a major statement. Let's go back to last week. Last week gave us only one day really of movement before it completely reversed and has really done nothing but give us a horrible breaking candle today. These are the kind of candles right here I talk about often. This is the one that closed below. All these attempts to close below these key averages never worked. Wick, 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 boom, red color, way below. This is me if I was in this thing, getting out and heading for the doors as quickly as possible, hoping not everybody else is going to notice as quickly, because it might take others another day or two to figure out that you might not want to be in these types of setups. What was the one before that? Levi. A week before that, oh, look, another crushing blow. So individual names here, this is the kind of stuff I was talking about. This isn't showing up on the daily indexes, SPYs and Qs, but there's a lot of technical damage being done out there, and I'm just going over the last couple of trades of the week here. And then before that, we had Luzi, which again, another great example of giving us a day and a half, and then boom, all the way down to the 50. This thing has been volatile as crazy, but there's no reason to be in any of this stuff right now. Just not what we want to see. So what I thought I would do is try and, you know, tie together some sort of content with the product and show people how to take a concept and make it show you what you want to see. So rather than buying the dips going forward, at some point, maybe I'm wrong, maybe it's just going to all go back to the way it used to be next month, next week, I don't know. But if it doesn't and markets return to things that Andy and I have seen in the past, you have to flip your head and your mind upside down from buy the dip to sell the rip. And some of the best entry points that you want to sell the rip are, considering what we've been talking about, maybe right here under a move up, right up into the 5-day moving average. The good news is yes, we can draw that 260 that you guys mentioned. We can also draw this 130, but the good news I'm going to share with you is that we can also filter for it. I think I have it here. Let's see. No, that's gem. Okay, so that's the gem, and so I'm going to keep that one, which we talked about that last week. We'll just talk about it now because I've talked about the jam down and buy, and as I said, you've got to flip your head upside down, and sometimes we can literally just, you know, flip these scans with a little bit of nuance here and there and look for the opposite. So instead of buying the jam down to the buy the dip at the 10-day moving average on a long trending stock, maybe in the future, we might find value in trade ideas serving us up ideas in real time when stocks are pushing up and then running out of steam into the sellers, because the exact same thing happens. And that's the only way people will survive a bear market, a seller's market, a correction market, whatever you want to call it, when buy the dip stops working. And so let me just see a couple of examples that were in this thing earlier today. Some of them kept on pushing. Yeah, here's the one right here. Dash at 724. I'm sorry, at 137.52. Roughly there. Snow. That was a good one. So Snow, you know, popped in at these levels up here. So you'll start to, at some point, market's gonna, you know, want to train you to do that. But look at this one. Also kind of fell along the 130 line there. So where I was going to go with this is let's build something from scratch real quick, just to try and create some ideas of how you can use the program to work for you in moments of interest. And like I've said, there's no rule of thumb of what you have to do when the price hits these levels. It's a level for you to observe, and it becomes a level of interest. Again, to borrow a good phrase from my friend Brian. So we could say, let's build an alert window. And yeah, the new high is what we're going to want to use. We'll clear out all the other stuff here. And we'll keep our, and let's say volume today, we have to have had at least, you know, 100,000 shares traded. We could do that. And price $5 and anything up to 500. Now, what would I do to try and talk to the program to say, hey, I'd like to see things that, you know, maybe been up for a little while, but are running into this line right here? Well, new high is our event. We've got that. Let's just run right into the money filter, which is 130. I'm going to type in there, and you've got the change from the 130 period. This is the same line that I've got drawn. We actually have a filter for it. So we're going to add that filter. And we're going to say, I only want to see a new high when this thing gets within 0.05% below it and no more than, you know, 0.05% above it. So a little 0.1% window right at that line. But what else can we add? I mean, this is where we can really start to go down the rabbit hole. But more than likely, you're going to want to see something of a bounce. Okay, so change from the close. Likely, we might want to be positive change from the close. So we'll go ahead and put that. We're trying to fade. Again, fading is the opposite of buying the dip. You're fading by selling the rip. You're going the opposite direction. I don't think we really need any relative volume for something like this, but maybe, you know, a change in the last 5 days, again, like consolidation, or we would normally have a pullback in the market. We would scan for a pullback for longs. Well, maybe we want to scan for a bit of a bump up for these shorts. Again, that's a fading concept. So change in 5 days %. And I'm going to say, you know, let's say it has to have been up at least 1% in the last 5 days. That's not asking much. you know, it should find things that that are doing that. And then, you know, maybe lastly, let's just add, you know, maybe a bigger picture. Again, we can go anywhere with this, but change from the 50-day moving average, as I said earlier in webinar, if something is under the 50-day moving average, it's probably not that healthy, and I'm sure there's some stocks out there that are doing this. So I'm going to do negative 0.01 in the maximum column at Trade Ideas. When you put a minimum, when you put a negative value in the maximum column, it's always a good idea to press the show me button and let it read it to you. The price is at least 0.01% below, that's our operative word, below the 50. Okay, so these are stocks that are generally in not great health. Maybe you could even take it a step further. You want to add a couple of consecutive days. Maybe you want 2 consecutive green days coming into today, perhaps. That's something else you could add. The possibilities are endless. We can really go anywhere with it, and I'm not trying to create a scan that's going to show me the S&P right here, but what I'm trying to do is I'm trying to find things that are finding things that have bounced maybe the last couple of days, but are finding resistance, and the new high is not meant to be bought, it's meant to be faded. Again, there's that word faded. So let's see what happens if we just click that and if we get anything today, and let's see how it kind of lines up on some of these charts. Grab that. All right. We didn't really get much with the parameters that I put in there. But there was the moment in time that it bounced up and hit that moving average. Okay, there was the moment in time it went through, and looks like it didn't stay much longer through there. Okay, there is a good one too. The high of the day was right there, right on the underneath. You know, that's probably something I really would be looking for, something like that you want to fade. But for whatever reason, there's only 3 returns in there. What could we do to loosen that up? I'm thinking maybe if we take that 50-day moving average out of there, we might get a lot more returns, because there's a lot of stuff, a lot of stuff that might not be below there. Here's a few more items. All right, so I'm not trying to scan for the perfect idea here. I'm just trying to, again, show people. There we go, GOCO right there at the top of the eye on the day, told me it was kissing that line. Oh, after bouncing below that line earlier. So, you know, that's kind of something that kind of falls into the universe of what I was looking for. Hopefully my screen's not frozen. So that's the concept behind, at some point, you're going to want to flip this market upside down. And, you know, maybe it's coming soon, maybe it's not going to come as soon as we know, but for now, again, just to rehash, I'm not very bullish at all. I'm certainly not short a bunch of things. I'm just kind of in cash, waiting and watching to see what happens. My screen's not frozen, is it, Andy?
No, it appears to be working fine.
All right, good. Anything you want to add to just a little simple construct there?
Well, I was answering a lot of questions, Steve, but I caught it at the end and following you. But you know, that's the kind of thing that works. And Steve and I have talked about this over and over, guys. There's more of an art to shorting than it is to going long, and that's why, like I think I explained in my webinar last week, that you know, finding those stocks that are bouncing up into the pocket, kind of what's, you know, whether it be a pocket or whether it be a moving average like Steve is doing, and you play the fading game. Give me, you know, because I can promise you, if you're chasing lows, you're gonna get beat over the head, because here's what happens when you're chasing lows, okay, and then at some point the stock is going to bounce. Well, not only do you have shorts covering, and what makes it so volatile is then you have new longs coming in thinking they caught the low, and they're so your up moves, you know, when you're on the wrong side of a short trade, can be really violent and hurtful.
Yes, because those are the contingencies. That's the exact opposite of what I was just saying. The sooner you flip your head upside down, the better you're going to have a chance of surviving the change in the winds. The people that are buying those dips are the people that didn't get that memo, and they're doing it with, you know, conditioned response, because it worked so often. And eventually they're going to run into that Einstein proverb of, you know, insanity is the definition of doing the same thing over and over, yet expecting a different result. So
right, exactly.
All right, so yeah, what I mentioned is I would happily go through the sector list. Let's see if there's anything.
Steve, before you do, somebody was asking if you would share your chart with the 130.
I did. I'm sorry, I meant to say that. Yeah, I saw that and I grabbed it. It's in the chat window for whoever was asking. I can share my cloud link to the 5-minute setup that I have here, the thing that I've been talking so incessantly about with the 130 line in there. So that's available. It's a cloud link. It's in the chat window for those who are asking for it. All right, so here's where the point we'll ask for, maybe a dozen or so charts that you guys want to look at. It's going to be hard to find some good ones, but if you guys find a good one, I'll be impressed. I'm going to go through our sectors here real quick. Let's see if we learn anything about what we've got going into tomorrow, what to watch. Let's just go through it here and see if anything catches my eye. Again, treasuries was the closest thing to the flight to safety today, even though the indexes showed there was not much damage. This heat map shows there was no hiding from the seller man today. Commercial real estate, still scratching my head on that one, trying to figure out how the leases are getting paid over the last year in some of these office buildings and whatnot. Not too bad, actually, and that kind of held up. There's our NASDAQ again, my analogy of holding onto the ledge there by the fingertips. It's going to have to resolve that pretty quickly. Same thing in the technology spiders. There's our S&P 500. The Dow, which was doing so strong just a few days ago, kind of gave us the middle finger here, it looks like, quietly a few days ago. We'll see how that resolves. What else we've got? Oh, gold. Again, no place to hide in gold or silver. Financials been just moving back. Well, they started so promisingly last week, and then they've just given it back. Same with energy. Energy had a really nice run. Let's spread these out a little bit more. Software under pressure. Semis, just a mess over there. The brokers, okay, the people buying stocks, E-Trade, Ameritrade, Schwab, Fidelity, Morgan Stanley, brokers, kind of the middle finger looked like as well. China. Agriculture, home builders really putting up a fight. Home builders are trying everything they can to not sell off. But you know what? I saw a lot of data come out today on Zero Hedge, and the early home building sales, existing and new sales, are very disappointing. And of course, it's interest rates not helping. More banks. Solar is under pressure. That's under technical pressure right there. Nothing to like about that solar ETF. More China. Gold miners can't get above that declining 50-day moving average. They're certainly not in good health there either. Silver, I mean, as much as I'm bullish silver long term, I gotta just look at it and say it's not looking that great short term. Banks again.
How long has it been since we've gone through the whole sectors and not found something that was kind of holding up?
That's why I really wanted to make this. I really wanted to make this a focal point. Yeah, and it just continues to drive home what we started talking about today. There are too many red flags that I don't like. So you're welcome to go out there and buy on margin and buy the dip, but if the dip blows through you like it did in Macy's, beware.
Yep.
There's that IWM crushing that took, the small caps were all the darlings for the last few months, but they really took a beating. And where did they close? They closed under the healthy 50-day moving average, just like that. IWM went sour. Retail, we saw that a little bit. Boy, I tell you, this was remember last week, guys, I was loving the airlines. They're not, airlines, hotels, they were looking great. Now they're giving it up. If you're a fund manager and you've got $1 billion to put to work, where are you going to put it?
By the way, somebody was asking for the alert window you were just kind of working with. Did you share that one?
Thankfully, okay. I saved it. I didn't give it a title, but I'll just call it we'll call it a fade in process, like a work in process. I hope that's there. It is. Yep, we got two. So we got my chart window in there, and we got fade in process, just a starting point. I figured that. Lastly, at the bottom of the barrel here, what was strong 2 weeks ago, oil services are now rolling back over. Not pretty. All right, so we got 5 minutes or so, maybe a little less. Let's take a look at what stocks you guys want to look at, and then that's all kind of the doom and gloom I've got to sell today. I'm not telling you guys to get short. I'm just saying why I'm not confident right now. Okay, let's see. Which one are we going to start with here? Dun, dun, dun. TAP. Okay, so Gabriel's got the first stock request online with TAP. Holding in there. People are going to be drinking, right? Is this Molson? Yeah. Hey, it's above the 50. As long as people are drinking and it's holding above the 50, it's probably going to hang in there. Not bad. GOCO was the scan. Was that something that was on my scan earlier that we looked at? Yeah, I think that was the one, GOCO. So that's in there now, James. Root. Under pressure on the daily, under pressure on the 10.
Mm-hmm.
You know, if I was bullish, I didn't even look at it until now. iRobot, giant short float, and it's been going sideways. Look at that, it's trying like hell to hold on to the 50 period. That's my chart of the day, but again, I'm not long it, and nor am I bullish. So I thought I would just throw that one out there. Yeah, Jet's not looking good for Mike. All right, 2 more for Dave. TXN. Oops, I need to be on that chart, and I need to be unfrozen. Hang on until I unfreeze here. For some reason, when I do well, I got to get some more memory in my computer. TXN. Hey, it's holding up there. Not bad for a tech stock, you know, as far as all the stuff we looked at on the NASDAQ, that's for sure. And then M-Chip. Horrible day today because it's a giant engulfing. That's about as ugly as you get. And when you see engulfing like that, you really want to pay attention to those, I think. HE. Hey, it could be consolidating into something nice. Hawaiian Electric. They're all mahalo down there. They don't pay attention to everything else. Not bad. LIXC. I don't think I've ever heard of this one. That's probably why that chart is kind of down there. Holding its 50-day moving average. If it breaks higher, might be something behind it. OCDX. Nice 3 days. Clinical diagnosis. Not bad.
Yeah, I think Varley's in that one.
Who is? Oh, has he been talking
Chris
about
Varley,
that?
yeah.
MSTR. Oh, I'm not gonna like that one. I just like, it's like dripping blood. You see how it just gave it away today? It had all the chance in the world to go either way, and it chose to just drip some blood there. And yeah, that's the beginning of something I probably wouldn't want to stick around for. I'm sorry to say. LABD. Good day today, holding its 50. Oh, that's just because it's a bear. It's a bear ETF. Yeah, of course it's going to do well. And I try not to get hung up on 3-time bear ETFs that are triples and doubles, because you're looking at the daily. If you want to start drawing levels and support and resistance, they're not really there, because these have decay and weird weightings, and every day they reset. And I've often likened the daily charts to these things as like looking at yourself in a funhouse mirror. It's just going to be distorted. So, you know, use the underlying ETF as your levels to play off of. CELH, we'll do a few more here. It's under pressure, so it's consolidating. It's almost like the jam up to the 10 period I was talking about earlier. I'd be so nervous that this thing's ready to release to the downside if I was long that one. Root.
Thought you already looked at that one.
I think I did, yeah, thank you. All right. I can't wait to finish on the last one for Chris, because this is a good one. I have something to say about that. United Airlines, broken, very much broken. APPS, not bad at all, not bad at all. It's kind of holding up. All right, let's finish on LTNC. I don't play penny stocks much, but I'm going to tell you what I've done on this one. You know, some of my friends have been on some stocks, and they were on 2 of them. And the first one was HQGE, I believe. There it is. This is what normally happens during a penny stock when you get the pump. And I'm not saying it was a pump and dump, but this is the initial euphoria. And then right here is the moment of truth, all right? The same thing I've always been talking about. This is where you find out if this thing is for real or not. Well, once it broke that, just like I've been talking about, it's never recovered since. Look, it never got back above that moving average. It's just been a slow walk of death for people to take their exit. Well, the other stock, and I participated in it, was and is LTNC. It's a water beverage drink. There's a lot of hydrogen, interesting stories there, hydrogen water. And so I dipped my toe in it because it looked great. This is the kind of stuff I'm always looking at. And I've been telling this group of people that for me to participate, the chart must confirm the story. Story is compelling, the story is interesting, but I don't want to get caught in something like that last one I just showed you. So I bought a little bit, and then I watched it, and then I waited to see what the initial reaction would be as it got down, to the trend levels. And lo and behold, it's worked itself up. Well, yesterday it won my attention, and I added to it. I added to it right there on that break of that little wedge. Okay, and I'm glad you brought it up. It looks bullish, and as long as it looks like this, I'm going to stay in it. As long as the chart confirms the story, I'm going to stay in it. I normally don't talk about these things, but this has been kind of an interesting little story. There's been a lot of fanfare and a lot of attention drawn to it. But I thought it was a great point to contrast that and juxtapose it with the same stock that the same group was looking at, but how you can use technicals to tell you right back here, it's done. It just doesn't want to move higher. You cut your losses and rip the Band-Aid off. But in LTNC, it's staying alive. So as long as it stays alive and continues to trend higher, I'll play along and have some fun. So hopefully that helps, Chris. I'm glad you asked that question. That's good. All right, so I'm all talking.
New low.
What's that? What'd you say?
We have reached a new low.
Yeah.
No, I'm just kidding, man.
I didn't even ask. He's not a shill, I promise you.
What's that?
He's not a shill, I promise you. I didn't.
Did somebody come in and ask about it?
Yeah, see, Chris's last question.
Oh, okay.
Well, see, it changes the context, doesn't it?
Okay, my bad. It does.
I wasn't talking my book. No.
Okay.
All right, so that's all I've got for you guys today. I'll bring Scott in for some announcements on the way out, and I'll see you guys next time.
Yeah, thanks, Steve and Andy. Before we go out of here, a couple items. Go ahead and get that free earnings ebook. Go to trade-ideas.com/earnings. Put in your email address and get the download. It'll also have some cloud links so you can import into your layout to use immediately after you check out the advice. There's a podcast. We've got some new episodes up recently. Go ahead and check that out. Search for Trade Ideas Podcast wherever you listen to your pods, and hit the subscribe button so that you can get the next episode as soon as it comes out. Check out the previous eps. Use the code OPPORTUNITY to save 15% off your first month or year of Trade Ideas. You can also use that to do an upgrade and save on the upgrade as well. You can find Steve on Twitter at TISteveG. Also find us at Trade Ideas and some other handles. If you follow Trade Ideas, you'll find the other ones. Trade Ideas Pro is the Facebook handle to like and share with your friends. And also info@tradeIdeas.com is the best place to send any of your questions. So go ahead and do so if you have some. It goes into our help desk software, gets you the help you need as soon as possible. And a recording of this will be up later on tonight or tomorrow. And you get an email reminder tomorrow telling you how to find it. Thanks, Steve. Thanks, Andy. Have a good one.
See you next time.
Thanks, everybody. I'll see you on Thursday.